by Gavin O'Dowd at Haypp Group. Welcome.
Thank you very much.
And we're very much looking forward to an interesting presentation, so I hand the word over immediately.
Thank you very much. And thank you all for taking the time to join me today. It's greatly appreciated. Just as way of introduction, my name is Gavin O'Dowd. I'm the CEO of Haypp Group and have been for the past 5.5 years. Prior to joining Haypp Group, I worked in the tobacco industry for the prior 9 years with British American Tobacco, with my last role as the General Manager for Sweden and Norway. Before we get into the finer parts of our business, I would like to start the discussion here regarding our higher purpose, why we exist. Our role is to inspire healthier enjoyment to millions. And simply put, this is about moving people from cigarettes, traditionally towards snus, but in recent years much more so towards nicotine pouches. Now, when it comes to the health aspects of that and how we define healthier on this space, I'd like to take a look at the tobacco and nicotine risk continuum so that we can help understand the impact around this space. So the continuum here shows a broad range of products, with those on the left being the most dangerous towards the health of the consumer, such as cigarettes and cigars. And then they're becoming substantially safer as you move across to the right, with the likes of snus and nicotine pouches being well recognized by all as removing 98 to 99% of the harm of a cigarette when it comes to the harm relative to the user. And it's this space that we are focusing on, of moving those people to removing the health impacts of that 98% for the vast majority of the 1.1 billion smokers which exist in the world today. And when it comes to the impact that this can have, I'd like to just take a look at some of this space from a macro angle on where we get to. The chart here to the left takes a look at the smoking rates across a broad range of European countries. And what you can see here is that the countries to the left, Sweden and to a certain extent Norway, they're not only are they the lowest smoking rates within Europe, but they're below 1/3 of the average European rate when it comes to smoking. And this has been entirely driven by the prevalence and the availability of safer products, so that those people which are the vast majority of smokers, who recognize that the harm that they're getting from smoking, have safer options for them to go and move towards. But what we see here with Sweden, which obviously has a deep tradition of snus ranging back almost 2 centuries, I think is one aspect in itself. But what's also much more reassuring to me in this space is what you can see with Norway, which is almost reaching the same levels as Sweden here. Now, if we revert back 20 years, there was a very limited prevalence of snus in Norway at that point in time. But over the last 20 years, there has been some fundamental shifts coming forward in this space. And if I take Norway and I open it up a little bit more here to the right-hand side, what you can see in the top chart is the impact on smoking rates per generation over the 15 years between 2005 and 2020. And you can really see the radical impacts, particularly for younger generations, of reductions in the smoking rate. You can then see in the bottom part of this page the almost perfect correlation between that and the growth in sales of snus and nicotine pouches for the same generations over the same period. And it's this case that we see here in Norway that we're very keen to bring to as many countries around the world as possible. Now, if we stand back and take a look at the overall category and some of the economic dynamics around it here at this point in time. So if I start off with the global market size, nicotine pouches and snus in 2020 were generating around about 27 billion crowns in the terms of consumer spend. There is substantial growth going through that. Almost all, in fact more than all of it, is driven by nicotine pouches, and we envisage that this will be a consumer spend space of 60 billion crowns by 2025. Nicotine pouches is a relatively recent concept which only started to emerge in the late 2010s. And what we can see is that in 2020, this accounted for roughly 30% of the global sales of the combined category. Already we see that trajectory growing fast year by year, and we envisage that by the time we get to 2025, nicotine pouches will account for 80% of the category. So this is very much becoming a nicotine pouch only category, which is driving this change among the consumer behavior. The next factor in this one is that the profit pool is substantial. The consumers are prepared to pay a reasonable price for the products because of the healthier attributes that they lead to them relative to that of cigarettes. But at the same point in time, the regulators are very positive towards harm-reduced products and the great impacts that they have on society and also on the healthcare challenges that their societies are facing over the coming decades. So as such, there tends to be substantially lower excise taxes on these products relative to that of cigarettes, which means that there is a significant profit pool to be divided between both the retailer and the manufacturer here. The category itself is extremely suitable for online, given that it's very low weight, recurring purchase patterns, it's not breakable, etc. along the way. It has a lot of suitable attributes for online, but yet it still only had 11% online penetration rates in Sweden and Norway in the early 2020s. And we envisage that this concept of the underlying growth of the category, combined with further growth of online penetration, will lead to over 30% CAGR in the years to come. Now, if we were to dig into this a little bit deeper regarding the overall category and where it's getting to, as I alluded to earlier, it was in 2017, 2018 where nicotine pouches started to come onto the surface, and you can see how the growth has been accelerating from there on, and we predict that that is going to continue for the foreseeable future. And this is entirely driven by the strong underlying demand by consumers for healthier products. That in itself is also being reinforced and supported by the regulatory environment, which many of the European governments and North American governments have now embedded into their doctrine of harm reduction as a key principle in how they manage this category going forward. And that in turn, that combined consumer demand and regulatory support for it has encouraged much investment coming in on the production of this space, both from very large global tobacco players and also from very credible smaller second-tier players, which are bringing some great innovation to it, which in turn is bringing better products to the consumer and accelerating that conversion from cigarettes to nicotine pouches. When it comes to the online competitive landscape here, there is multiple players across all of the markets here, but we in Haypp Group run multiple stores in each market, because the more stores we have within each market, the stronger our organic rankings within Google, and hence the more share of the traffic we get for people which are making the migration across to the category or making the migration across from offline to online. We can see that there's a very fragmented other range of players here, but when we look at it together, there is no player around the world which is up to 10% of our size when it comes to share of the online sales in this space. Other players will often come and go, but we maintain and have maintained extremely strong shares in this space over the past 5 years. When it comes then specifically to that as regards to what our share is, we look across the world in 4 different business units. Sweden and Norway are our core markets, and for Sweden and Norway we have had just over 10% and 15% respectively of the combined market. However, what we see is that this is a reflection of the market for both snus and nicotine pouches. We are disproportionately much larger in the rapidly growing category, which is nicotine pouches, where we have roughly 1/4 of the entire market, not the online market, but roughly 1/4 of the entire market in Sweden, and roughly 15% of the entire market around nicotine pouches in Norway. And then in the bottom of this chart, you can see what is our share of the total online sales. And we have roughly 90% and 80% respectively share of the total online sales across these geographies. Now, if I move across to the right, these are what we refer to as our growth markets. And here, when we talk about the EU, it is effectively German-speaking Europe and the UK, which are the markets that we're present in at this point in time. And also the US, which is across the 51 states itself. So if I look at the combined snus and nicotine pouch market within the US, the vast majority of the market is already nicotine pouches. Nicotine pouches is already 7 or 8 times the size of traditional Scandinavian snus within it. We have roughly 4% and 2% share of the entire market in those markets. But what we can see is that while the online penetration is extremely low and our share of the total market on the back of that is extremely low, our share of the online market, remains high. And as penetration levels for these markets grow online, we envisage that, and we're already seeing, rapid growth coming through these markets accordingly. When it comes back to what our infrastructure is regarding our logistics setup, we run a combination of own warehouses and third-party logistics, generally local within each market, unless there is a regulatory reason why we struggle to at a point in time. In the US, we have our own warehouse in Texas, and we carry 2 3PLs, one on the East Coast and one on the West. We have a warehouse just outside Stockholm here, which services all of Sweden. We have a similar warehouse just outside Oslo that services all of Norway. And we have recently opened our warehouse in the UK, servicing the UK market. The nature of these products is that irrespective of the brand, strength, flavor, etc., they tend to be very comparable in the dimensions of the product, which makes it extremely efficient to introduce high levels of automation for picking, packing, and shipping. And we have invested heavily in this infrastructure, and it is continuing to improve on our systems architecture, which is releasing more and more benefits of scale as we grow. On the back of this, as regards to what is our performance within our primary measure, which is the growth in nicotine pouch consumption, or growth in nicotine pouch sales. And what we can see is that we are on a constant trajectory of solid, robust growth in the 40 to 50% trajectory for the last 7 to 8 quarters. And we see no fundamental reason in the external dynamics for that to be slowing down. And this is, again, to reiterate, it's driven by consumer demand for the category. It's driven by migration from offline to online. And it is manifesting across all of our markets. And nicotine pouches now goes from accounting for roughly 1% of our sales 5 years ago to accounting for about 44% of our sales at this point in time, and is the primary driver for sales across the group. However, in addition to our sales of nicotine pouches as a total, we also got to bear in mind that our platform is generally used as the key launch basis for all new products coming to the market, for suppliers to test new products and for consumers to trial new products. And with that as a basis, we recently launched products which have come to market in the last 12 months, account for roughly 20% of our sales, which again instills the confidence of the product innovation which is coming into the category and the pace of change which we are driving here as a player within it. Perhaps to move along quickly to our financial targets. We've come out with sort of 3 very clear statements regarding our financial targets. We intend to reach net revenue of 5 billion crowns by 2025 or above. We envisage we will do the vast majority of that from organic growth. Regarding profitability, we will, because we believe this category is very much in its infancy as regards to what the long-term basis is, we will continue to prioritize growth over profitability. However, even within that, we envisage that we will achieve high single-digit earnings over the medium to long term. And due to the potential that we see for long-term growth within this category, the board has determined that we can get a very strong return on the operating cash flow that we generate within the business ourselves, and hence at this point in time there is no appetite to distribute any dividends. Regarding the future potential growth for this space, the overall category, as I alluded to, is growing extremely fast with 41%, and the online penetration 41% between 2020 and 2025, and we have been outpacing that heavily so far. And the online penetration is still relatively low in the low double-digit space. And we have a leading market position across all of the key markets where we are currently present in. Quick update on our Q4 trading, which we released 3 weeks ago. Our positioning on this remains very consistent with what you may have heard from us in prior discussions. The favourable market trends continues regarding harm reduction, and the migration from offline to online. The nature of our category is it is non-cyclical. This is not the type of category whereby there is extensive amounts of consumption pattern changes at different points in time in the economic cycle. And in fact, we do see that our price advantages of online is perhaps accelerating that migration from offline to online for our space. And we see very limited inflationary pressure coming through on the products because of the high margins which the products are generated with. And any places where we have seen minor price increases, we have been very comfortable to pass those on to our consumers without any pricing pressure being pushed back. Regarding growth, we have successfully reverted back to strong growth in Norway. Perhaps just to give some context on this, during COVID, the Swedish-Norwegian border was shut down. Roughly 1/3 of the nicotine pouch and snus which is consumed in Norway is bought at either the duty-free in the airport or is bought at the cross-border sales coming in from Sweden. Hence, the market grew substantially by about 50% during COVID, and our share continued to perform really well within that. As the border reopened, the market reverted back to a re-established base, and hence we did face a degree of a headwind in that. However, we now see that we're back to very strong growth in Norway again, particularly within the nicotine pouch space. We have sustained strong development in our growth markets, both across the DACH region, the UK, and particularly within the US, where we're seeing some very strong progress within it. There has been some recent regulatory changes which have manifested within California, which we are seeing accelerating our growth in California itself due to a flavor ban for the offline brick and mortar universe within California. And we continue to lead the industry regarding product standards. Every product which we sell on our site, we send off for independent testing before we will offer to our consumers, and we set clear standards as regards to what the ingredients are and what the nicotine levels and what the branding can be around any products which are sold on our sites, and we continue to lead the industry through that space. And we have strengthened our organization across some key areas in order to support the long-term growth ambitions that we have, both for our existing markets and beyond. We're very well positioned to take advantage of a rapidly growing international market to reach those financial targets. We have a proven revenue model of acquiring and retaining customers through the strong value proposition. It is hinged upon the breadth of assortment that we have for our consumers, the convenience in our delivery and shipping models going through it, and the price advantage relative to offline. We are the partner of choice for all new launches within the industry when it comes to bringing products to market, but we are also remain the largest insights provider for the category globally as the partner of choice for our suppliers when it comes to understanding what the consumer is. Our enhanced digital infrastructure is giving us great benefits of scale as we continue to grow, and our strong balance sheet and non-cyclical nature means that we believe we have some great opportunities over the coming years to accelerate our growth as we go forward. I'm going to paraphrase the overall dynamics as we see it within our industry. One, there is just over 1 billion smokers in the world, the vast majority of whom are looking for a healthier alternative. The fastest growing category globally in the harm-reduced space is nicotine pouches, which we are the largest retailer of globally, either online or offline. It is a perfect product for online, and we are the global online market leader. We have a symbiotic relationship with our suppliers where we support them heavily on consumer understanding and on media, and we have a track record of benefiting from regulation, and we welcome further proportionate regulation into this space. We have impressive growth economics where our gross margins continue to improve as we scale within a business, and we have an excellent team with a combination of both industry experience and digital experience married together to drive this organization forward. With that, I will pass over for some questions.
Thank you so much, Gavin, for a very interesting presentation. And I was thinking maybe we could begin with the market, because as you mentioned, there is a rapid market growth and there is the online conversion and there is a change of consumer behavior and also maybe some underlying growth there as well. Could you elaborate on how these effects act out in terms of size? Which one is the main driver of sort of the underlying market growth? Which one is the strongest contributor?
Absolutely. So one of the key component drivers for the underlying growth is the new consumers entering into the category. And perhaps if we revert back 5 to 7 years, whereby even in the markets like a Sweden or a Norway, where snus was a very well-established category, the traditional tobacco-based snus products were very much a male-dominated category which came through, which meant that Sweden and Norway, for example, are the only two countries in the world where you have a higher share of female smokers than male smokers. The only two countries in the world driven by the traditional products were very male-centric. Now what we can see is that with the nicotine pouch space coming in, the acceleration of people to move away, particularly females, to move away from cigarettes towards nicotine pouches in a way that they weren't prepared to do with snus because of the oral hygiene perceptions or perhaps the teeth staying perspectives with it, is accelerating new consumers into the category. And now the total oral category across Scandinavia, first of all, is growing at a much faster pace than it was before, driven by that. And the other benefit of that as well is the smoking rates across Scandinavia among 18 to 22-year-olds has completely collapsed. So just to put this in perspective, 18 to 22-year-olds, less than 1% of Scandinavians are now smoking. Versus if you were to look at that as a comparison to Germany, where it's roughly 17% which are now smoking. So the same number of consumers are coming in, people are still looking for stimulation, but they're choosing the safer base, and that is what's driving forward that growth. The same is equally valid in other countries such as the US, the UK, Germany, where snus had often been tried across some of these markets before, had never really succeeded. But the general awareness around public health and the increasing awareness around alternatives, such as nicotine pouches, and the availability of the products is causing this snowball effect for the category itself to grow through. I don't know if that goes some way towards answering the question.
Oh, that's great. Thank you. And I was thinking then, selling online, if we look at the mature e-commerce markets,
Yes.
What is your perception on the customer and the main driver of online conversion? Are they price sensitive? Is it a matter of availability, convenience? What are the drivers to drive the customer online?
It's a range of factors combined, and some of them will be a little bit stronger for certain consumer segments relative to others. I think one of the primary factors coming through on it is our assortment. So if anybody walks into a physical store, a convenience store or a grocery store, they may have a choice of somewhere between 25 and 40 different snus or nicotine pouch products to pick from. We have 800 on our stores, which means that people can personalize products much more so with us, with their purchases with us than otherwhere. Also, because we have such understanding of the consumer, many of the manufacturers choose to launch new products on our sites first because it's extremely efficient to understand how the consumer interacts with it before they will spend extortionate amounts of money in order to launch these products across brick and mortar, which means many of the consumers in turn come to our sites to get the newest products and where it comes through. So assortment is definitely a very big component in this space, and you can see the amount of sales that we have of products which don't exist across or don't have general listings across the retail unit, the physical retail universe is huge. The second piece is undoubtedly pricing, especially in the current economic circumstances. You know, if people can find their snus or their nicotine pouches 15 to 20% cheaper somewhere, especially for something which is a habitual product, they're very comfortable to do so. And then, of course, convenience. Convenience is a key factor of getting it right, more as a not having it as a hygiene factor, so that when somebody orders their products, they know they will have them in 24 hours. And getting that three together, I think, is the holy trinity, effectively, for getting and keeping our consumers.
Thank you. And the next one is on consumer behavior. Is a typical consumer a recurring customer, and maybe by extension, how do you invest then in marketing? Is it to build brand awareness, or do you want to push conversion? How do you think about that?
Absolutely. I'm actually going to take those questions in the opposite order, perhaps, just to give a bit of context to it. With the first one being how do we attract the consumer in the first place, and the second one being how do we keep, or what does retention rates look like once we have them? So this is a very highly regulated category, and hence marketing capabilities are extremely low. And we are very positive to that as a concept. So for example, in this category, it is illegal to run with Google Ads, it is illegal to run with Facebook, Instagram, etc. So our entire model for how we acquire customers is that we dominate the organic rankings for search engines, particularly for Google. So that when somebody picks up their phone and they type in nicotine pouch, snus, or one of the brands, or healthier enjoyment, or getting away from cigarettes, any space around here, our sites, and hence why we run multiple stores in each market, our sites tend to come up as the first, the second, and often the third or fourth sites within the organic ranking within Google. Now, this is not something which happened. This is a core DNA. We call this SEO, or search engine optimization. This is a core chromosome in the DNA of our business, where we build all of our infrastructure and all of our sites to optimize for SEO. But there's also a space here of, because of our scale, we're able to create a depth and quality of content that no other sites are able to provide when it comes to ensuring that our sites will always be at the forefront of it. So this is one of the spaces where bigger is better, and hence it becomes self-fulfilling along the way here. Then perhaps reverting on from there in regards to, okay, how do we attract the consumer as regards to retention? So generally what we find is that once we attract a consumer, over 70% of them will return to us over the next 90 days. Once we get them in for a second order, they're generally us. And then the lifetime value extends along from there. And actually, the share of their consumption that we get in their second year with us, third year and fourth year continues to improve and improve as they get more conscious and more comfortable as regards to doing the pre-planning and of the purchase, and recognizing that the convenience levels are at the high end when it comes to getting the products within 12 to 24 hours, generally along the way. And it's this space of getting all new consumers without having to pay for traditional marketing. Of course, we have a very dedicated in-house team which is our investment within marketing. So hence a relatively low or almost non-existent CPA for getting our new customers, with an extremely long lifetime value, because the consumers tend to have extremely high retention rates with us. It's this combination which is the essence of our economic model.
Thank you. And then I was thinking we move on to the gross margin, or the P&L. Yes. In the gross margin, like you mentioned, your position in the value chain, but also scaling contributing to the gross margin that you displayed in the last quarter. Do you feel that you have established a gross margin on a level here, or do you feel could it be there are other macro factors that could put pressure on this looking forward, or how do you argue about these factors?
I think we have a pretty strong. I'm not concerned as regards to, not overly concerned as regards to macroeconomic factors around this space when it comes to gross margin, because as I kind of alluded to, we've seen perhaps in other markets, even in the 2008 correction, in the dot-com bubble correction, in the 87 correction. Nicotine consumption is not something that people alter radically within this space. They certainly don't give up, and there's also a perspective of it's the one space people are prepared to not sacrifice their, some of their disposable income within it. So that macro aspect, I don't necessarily see as being a huge risk to it. However, we do, like we say, we prioritize growth over profitability for the short to medium term, because we see that we're very much in the infancy of where we're getting to here. And if at any point in time we see a window that we can get and we don't see one of these at the moment, but that we can get extremely high return on sharpening our gross margins a little bit there when it comes to land grabbing across the consumer space, I think that's a decision that we would be prepared to have. But I don't think it'll necessarily be driven by macro events. I think something like that would be driven by our own choices and our own decisions as regards to how to navigate that space.
That's great, thank you. And then finally on the expansion, maybe you don't want to say particular markets that you are targeting, but could you elaborate a bit on the characteristics of a typical market that you would like to address in the future?
Absolutely, absolutely. So I think it's fair to say that for the foreseeable future, any geographic expansions is probably going to be within the European, North American space. There is 35 million smokers, for example, in the US, and there is 49 million smokers across the EU. Perhaps the EU, excluding Brexit, there would be 49 million smokers coming through it, 45, sorry. So I think the characteristics as regards to getting into a market, and we've tried these, we've refined this a lot over the time. I think it's about turning up at the market when the consumers are ready to make that transition. And that generally coincides with when the brand owners themselves are turning up in the market, so that we together move into the market, create category awareness, create brand awareness, create channel awareness, and grow from there. And this has been really successful for us, both in our performance within the US, in our performance within the DACH region, and our performance within the UK, of not going in too soon, not going in too late, and trying to take a sort of a Goldilocks approach on this one.
Thank you so much for coming here and presenting, and thanks for a great presentation.
Thank you very much. Thank you.